Good morning, everyone. Today is absolutely enormous for a lot of reasons. One is personal income and outlays, which includes PCE. Then we have a 3-day weekend, which has its own de-risking effects on the markets. And then we also have the labor market data coming out next week, along with ISM services. It's going to be absolutely huge. We're going to take a look at the charts, and we're going to talk about what could potentially happen from where we're at, what we could see today, and what we could see going into next week. So, guys, I got to tell you, Saturday, September the 6th, I have an options workshop. This is the last beginner workshop where we talk about what calls are, what puts are, how they can benefit you with your portfolio, and what exactly all goes into it, including the risks that go along with it. There are a limited number of seats. There is a live Q&A that goes along with the workshop where you can ask your nuanced questions. And there's also a forum community that goes on for 60 days after your sign up where you can interact with that community and get even more of your questions answered and get access to more resources and opportunities as well. And so just click on the link in the description. Make sure that you use code word money when you sign up. That's going to get you a big fat discount and a very, very deep value in it. And so, guys, I want to put up the calendar for right now just so you can see what's going on. So as I record this, it is not 8:30 yet. So we still have the personal income and outlays coming up for us. And the worry right now is that they come in a bit higher. And you can see the 0.3, 0.4, 0.5 over the previous 0.3s across the board. And then we'll be looking at the year over year numbers that we get as well, which was previously at 2.6. So if that goes up to 2.7, 2.8, the higher that goes up beyond that 2.6, they would talk about inflation rising. And the tariff-based inflation is the thing that's somewhat worried about. Jerome Powell says, we should see a one-time movement. It might be spread out over several months, but we're not as worried about that right now. We think it's going to be a one-time thing. We don't think it'll be entrenched. So we've heard similar things before. We'll see what they have to say about that as we move on. Final for Michigan consumer sentiment at 10 a.m., by the way. And so let's move on from there. Tuesday, September the 2nd, we got ISM manufacturing, and previously it was at 48. Consensus looks like it's supposed to be tick up a little bit, although that's still contractionary. Down below 46, I should say 46 or below is where things will get scary. So watch that number to come out. If you see it pop down 46 or below, that's when you can really start to expect some downward pressure on the markets from that number. Up above that, I don't know that it's the biggest catalyst that we're going to see. If it goes up to 50 or above, that we start to see more of an expansionary number come out of that index, then that would be something that could actually be very bullish for the markets and maybe put a little bit of upward pressure on it. So let's scroll from there. We have JOLTS on Wednesday, September the 3rd. Now this number gets scary under 7 million. So if you see this number come out at 6 point anything, that's going to be something that's going to be like, oh man, first of all, it's going to be down below our recent trend. And it's also going to take us back to being below some pre-pandemic levels as well. And so that's something that we want to watch for JOLTS. If that comes in very low, very bad. If that comes in north of 7 million, especially strongly north above 7 million, once again, that's upward pressure for the markets. And then Thursday, we have more ISM services data. And then moving on from there into Friday, we have non-farm payrolls, which is absolutely huge. If that comes out right now, 78,000 is the consensus. People are going to watch the revisions this time. And they're also going to be watching to see the current number that's put out there. Because for those numbers that we get for non-farm payrolls, we thought that we had a whole bunch of jobs, hundreds of thousands, and it turns out that it was only tens of thousands instead of a 3-month period. So that's going to be huge to watch for that number come out. The market, depending on what else we see happening today and through next week, the market could react pretty negatively leading up to that part with a whole lot of pressure coming off of it. That number turns out to be not so bad. Unemployment rate, if it's 4.3%, that's above trend. The market, and if it's priced in already, the market's not going to react too much, I don't think. But if it's 4.4% or higher, the market could probably get spooked a little bit. But once again, we got to look at this holistically, not just off of any single number that we get. So what I'm making is the case that next week is a big week. Don't be surprised if we see some de-risking today. But also when the market strongly expects one thing to happen, when it leans really hard to the bullish side, that's like, this is for certain. This is going to be great. This is going to be huge. You get contrarian come in and push us down. Same thing for bearish. If it's like, well, there's going to be a lot of profit taking, a lot of hedging, we're probably going to see some weakness coming up. When the market strongly suspects that as well, when it leans the heaviest into it, that's usually when contrarian comes back in. So we do want to be aware of what could come our ways, and we want to be careful not to be overly bullish or overly bearish, but we do want to watch the technicals. And that takes me into a nice transition into the charts themselves. All right, so here's the chart on the Qs. We'll start here. So you can see, I said yesterday, watch above 574. We popped it. We got to take on 578. selling back in the after hours and in the pre-market, de-risking a little bit leading up to those numbers that we get through personal income and outlays. Don't be surprised to pop up a bit off of this one. Don't also be surprised to settle back down after that one to de-risk going into the long weekend, and also a pretty darn big week that we might see some early positioning leading into next week as well. I think some hedging might be merited. I don't really know how it's entirely avoidable, but we'll watch and see. Now, moving on from there to the SPY. There we go. The daily chart on the SPY, I think, is probably one of the more interesting to look at. So 647.64, I said watch above that. We break above that, we should have a nice move up. And it was half decent, putting in a new all-time high for SPY yesterday. If we drop down to the hourly chart for this, you can see a little bit more of the nuanced action. Once again, very bull channel kind of look here. We want to watch and see if we're going to break a bottom trend line. I mostly trade the Qs when I do my day trading, so I have more technicals on that. For the SPY, you can see a little bit of a bear flag structure on this one, maybe settling down a little bit. But once again, I'm careful not to be overly bearish at times like this, because it'd be nice if it would be like, hey, I would de-risk going into next week, so the market's also going to de-risk going into next week, and so I'm just going to short and be happy today. And, maybe that is the right call, maybe it isn't. However, the market's a highly nuanced thing, and like I said, when you feel like you have certainty in the market, when you feel most certain, now's that time. Usually that's when, like I said, that contrarian perspective can kick in. So I'm watching the technicals, watching what to see. If we can't get back above this support, out of this resistance that's up here, it's support from yesterday because we closed up above it. If this fails as support, we fall down below it, we hit our heads on it and get rejected, maybe that's when we sell back down. IWM has one of its highest closes of all time yesterday. I think we got beat out going back here to November of 24. This is the weekly chart that we're looking at. So going back to that week, we closed that week at 236. Let's drop down to the daily chart. We'll be able to see a little bit more. There we go. A little bit more scrolling on this one. So we had a few days where we had higher closes. So not too many though, just this little tip of the iceberg right here with a whole lot of movement underneath. And these stocks are going to be the most sensitive to interest rate risks, to inflationary risks, to economic risks such as recessions. These are small cap companies that are tracked by the Russell 2000. IWM tracking that Russell 2000. This is the biggest ETF that you're going to find for it. And so this is one that even though it has its run from the inverse head and shoulders down here, I said 248 price tag would happen. We got darn close so far. The story's still odd on that one. So once again, today's the day where we kind of start positioning. Monday or Tuesday is that day where we really start to answer those questions and see how we're careening towards that Friday date. Well, JOLTS is going to be huge on Wednesday. Non-farm payrolls and unemployment on Friday. So absolutely want to watch those. Nvidia, another big one that we should be watching out for here, because yesterday it actually popped to, the top of this structure that we have and then settled back down wildly from there. And then this morning trading down below it, we have to watch and see if we get resistance up here, because if we do, we can travel south on this thing, and that can drag things like the NASDAQ 100 down pretty darn heavily. It can also influence the S&P 500, and usually the Russell 2000 follows. It doesn't have to. It just usually moves in outperformative ways. So we'll have to watch and see. And then Bitcoin. If Bitcoin fails to hold this level it's at right now, we could see 103 down to 101 pop out of this. That's the 200 EMA, 200 SMA. Right now, we're sitting on top of this old structure that we had back here in the earlier part of the year. And that also puts us back on top of the previous highs that we had towards the end of 2024 into the beginning of 2025. So it's going to be a really exciting couple of days, to say the least. We'll see if we get that sell-off September, and then we'll also watch and see what we get from there. I still think that 2024 has some wild green to go, and I think that there's people looking for some deep discounts. I know that I am. I'm hoping that we see some through September here. That'd be nice to see some of our favorite plays out there de-risked a little bit, setting up that next bullish movement where we could really take advantage of those options plays, especially those call option plays, or maybe some people would even like to sell puts. That's my next workshop that I put out there is going to be that next level where we talk about selling calls to open, selling puts to open. They have much different risk profiles than what we'd have for buying calls or buying puts in order to open your position. And like I said, guys, that workshop that's coming out on Saturday, September the 6th at 2 p.m. Eastern time, with the live Q&A, with the forum community, and also that discount code of money, MONEY. If you want to know what options are all about, that's the place that you can go, and we'll talk about it. Normally it's framed for an hour. It goes about 90 minutes. I actually stayed up to about 2 hours or so is that time frame. And it really is a good time. And I stay as long as I can to answer as many questions as possible. And everybody in the last 2 workshops left feeling satisfied and eager for that next higher level of workshop to come along to deepen our knowledge about those options plays. So guys, I hope I see you over in the workshop for that. If not, excuse me, meet me over in the Discord. That link is also down in the description. Code word doctor for the Discord. And there's some coursework as well for options, technical analysis, and technical trading. Code word doctor works on those courses as well. And there's a bundle discount that goes along with it that also works on top of that coupon code of doctor. Guys, happy Friday. Thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.